Welcome back to Stocklabs Market Recaps. We just finished the first week of February, and it was a pretty exciting one for markets. Things went pretty well for the most part during the week. Started a little soft on Monday, and then sort of bounced some. And we had the Fed meeting on Wednesday, I think it was, not Thursday. This past week. Yeah, Fed meeting on Wednesday. They raised 25 bips. Jerome did his usual spiel, and then market finished up big on Wednesday and also followed through on Thursday before giving back the Thursday move on Friday. Friday, we also got non-farm payrolls, which was a blowout number compared to expectations. I think like over 500,000 jobs created for January. Estimates were for something under 200K. Um, so yeah, kind of I guess the sell off was mostly driven uh, off of that. Dollar rallied hard. Probably expecting more hawkishness from the Fed, even though they had just spoke on Wednesday. So performance wise, Russell led up 3.99%, almost 4%. Q's not far behind, up 3.5%. S&P up 1.7, and the Dow closed flat, down 10 basis points. Credit held up okay, up 33 bips, and bond market finished flat. So we'll see. Oil, another bad week, down 7%. Also not in here is natural gas, which has been just completely dismantled in a straight line since last several weeks, couple months. Going back a couple months. Gold got hit hard on Friday, closed the week down 3%. That sort of went hand in hand with the dollar rally and the sort of the strong economic outlook, call it that. But yeah, pretty good week overall. The Monday was down, sort of squeezed a little bit into the Fed meeting, followed through, like I said, on the Fed meeting and the day after before giving some back. So pretty good week for markets. Qs remain a leader, sort of mirror opposite of last year, where the Dow was always leading, sort of, or the Dow was remaining more stable while everything else sold off. IWM has been doing pretty well this year so far as well. If we jump into the leadership stocks that we have and follow, they, as you can imagine, had a pretty decent week as well, just with how the NASDAQ did. So Facebook up 23% this week. I forget if this week was this must be the week that they reported earnings. Basically, stock was up 25-30% at some point after the earnings report. I don't think they said anything special other than they were planning to keep some of their costs in check or whatever. Revenues look, kind of whatever. They're not, their revenue growth is not what it used to be. But market was kind of relieved more than anything. I think that they didn't bomb out 2 quarters in a row. Tesla up 7%, pretty good rally there. Apple up 6, Google up almost 6, Microsoft up 4, and Nvidia kind of in line with the Nasdaq up 3.7. Amazon only up 1.4. Actually, was up more, but reported earnings that were meh. Looks like AWS is seeing a lot more competitions coming to AWS than or not than anything else, but just after Amazon dominated that market for a long time, there are more people. There's more options for customers over there. So yeah, pretty good week for the mega caps. They, as a collective, outperformed the Nasdaq. Mostly it's due to this meta move, but 6% for the week is pretty good. I mean, it's going to be hard for the market to trade down uh, when these ones are moving like this. So pretty good week. Breadth wise on the industries, it was pretty broad. Minus basic materials. Again, I said at the beginning of the year, I think this trade is going to be kind of nothing this year. I mean, they'll just trade a little bit back and forth, but you're not going to see the move that you saw from 2020 to 2021 anytime soon again for these guys. Utilities flattish, okay, down 0.5%. Industrials were up 4%. Services up almost 4. Tech up 3.2. Consumer also up 3%. Financials up 1%. These are, I'm probably going to put these in the same sort of basket as basic materials. I don't find anything like exciting about financials. And healthcare, not a great week for them, 1.8%, but most of the action was in the tech space and the tech and service space, and the stuff that got beaten down the hardest last year, which healthcare is a part of that, but talking more on the tech and software side. Subsector wise, we had some decent breadth. Leaders, okay, drugs, home, rec vehicles, some semiconductors. Um, Kind of a pretty broad mix here. Um, and then we've got 25. We've got 38 sectors up over 5%. So that's a good solid week, breadth wise. Um, not too hot. Where you see like 100 sectors, everything was being bought. That are up 5%. 38 sectors, pretty good. There's some sort of, now that we're a month into the year or more, should see some more stock picking going on as opposed to just buy everything, sell everything sort of action. Although it has been, a lot of just put on exposure and buy whatever for the first 4 or 5 weeks of the year. But I think you'll see the breadth start to become a little more selective, at least for the rest of this quarter. App software up 5%, so it's good to see. And on the downside, not too much. So oil and gas take the top three, and then precious metals, gold and silver stocks got walloped with the gold move, especially on Friday. Um, Solar pretty weak, but also only 2.5% down is not that, for the betas that those stocks have, is not that anything to be concerned about. So only 5 sectors down 5%. So basically there was almost no downside breadth. Um, so breadth wise, pretty good week for the market. We can check by market cap, and if I can find it. So 1 to 5 billion, it's up 3.8%. That's pretty good. 5 to 10 billion, up 2.6%. Okay, that's a little bit light. 10 to 50 billion, up 1.5, which is getting weaker. And 50 to 100 billion, only up 10 basis points, so not very impressive. And over 100 billion cap, up 76 basis points, which is really soft. I mean, compared to what the Nasdaq and the S&P did this week, they were up, 3.5%. You can really see that the gains in the indices were concentrated to those gigantic companies, but overall, in that cap range, a lot of stuff was lagging. So, uh, it's kind of hard to say. I mean, from an industry perspective, the breadth looked okay, but when you look at all the stocks as a whole, the breadth was, I would say it's a little bit weaker than and then how the indices performed this week. Um, So we'll see if that uh, plays any role in the early action next week. So for our intelligence for this week, what do we have? Short Brazil, we have Chicoms and short utilities, defense stocks, the Dow, bullish, and was this going to ignore uranium? Going to ignore this carbon thing, and okay, gold miners should bounce according to Stocklabs. So if we look on the downside, this okay, some immunotherapy ETF is bearish. Going to ignore that. Bear Nvidia ETF is bearish, so it should be bullish Nvidia, maybe bullish semis overall. Boyle, okay. I know that you see a lot of people trading this. I even attempted to trade this a little bit last week, but immediately vacated it. Boyle has been kind of a disaster for people. I mean, can't even imagine the amount of money that is just underwater in this ETF. But Stocklabs looking for a natty gas bounce this week, so maybe there's a little bit of relief. Banks, okay, big banks. This is a bull bank ETF, so bearish banks this week. SARK is short. Kathy Wood ETF is bearish, so bullish ARK this week. And we've got regional banks bearish. We've got cannabis bearish, which is like an evergreen trade. What else? Gonna ignore the rest of these. Cloud computing bearish. Uh, the dry bulk index is bearish. Okay. Yeah, so if we just focus at the top of this list, sort of, I mean, it's not really providing too much color on the, what might happen with the overall indices, but, there's some stuff you can try and plan here. Maybe bullish natty gas, bullish some semiconductors, the banks, I talked about earlier, the banks, I'm not expecting much out of this year, but, they're bearish this week. So, um, maybe you have a chance to play them on the downside a little bit. But yeah, I mean, I'm not saying like a whole lot of stuff that's pointing to some clear direction for the coming week. As far as the oscillator goes on the overall market, now you can see that there are a lot of days here where we're hitting, we've been hitting these overbought signals. Actually, we have them on 12-month, I think. We almost had one on 10-year, which would have been impressive, but we've got like all these clusters of overbought signals. So really, I mean, the statistics on these signals are not too bad, right? So 12-month overbought, generally you see some follow through. If we look back a year, if we look back 6 months, I mean, same thing. Look back 5 years, same thing. I mean, when you get this overbought, it tends to be like you're in a pretty good trend move. Um, Now, because of the action with the Fed last week, and then also the jobs numbers on Friday that sort of started to revoke some of the rally, probably on Monday, Tuesday, we'll see some downside pressure on the market. Um, but once, if that materializes, we'll get a good picture because you'll see if the buyers step in right away. And if they do, that means that, the buyers are completely in control. They're going to push the market higher, for a few more weeks probably. But if it all kind of disintegrates a little bit, it becomes trickier because now people will be forced, kind of for the first time this year, to defend their positions a little bit that they've taken over the last few weeks. So we'll see. I mean, I'm expecting downside Monday, maybe Tuesday at least, and then kind of want to see the reaction after that to decide maybe how the rest of the week is going to go. But obviously, everyone is sort of expecting a little bit of a pullback at some point, just because the market has gone straight up this year. But it's more about what the reaction is on that pullback. I mean, does it get if it gets bought immediately, then it's like you could probably cancel the bear market and just play along the rest of at least the first half of the year, till the sell in May crowd comes out. But like I said, if it gets really weak again, then could be choppy for a little while again, kind of how you saw in November, part of December last year. So we'll see. For now, everything looks pretty good. I mean, you kind of just can basically just buy dips or whatever you want to do, and just manage your positions from there. But yeah, I mean, it's been a good run for the market. It's looked pretty strong outside of the Friday sort of sell off. Um, Last week was pretty good. So yeah, down Monday, maybe Tuesday, and then we'll see from there. So hope you hope you're trading them well this week, and we'll be back next week to see how everything went. Talk to you later. Bye.